Welcome to the deep dive. Today, we're really diving into some fascinating reports, stuff that reveals these massive shifts happening right now.
Absolutely. Across tech, global economics, media, even how we actually work.
Right. And our mission, as always, is to unpack all these developments together, find those crucial bits of knowledge that help you stay genuinely well informed.
It's definitely a dynamic week. So many interconnected stories, and they really showcase just how fast things are evolving.
Yeah, it feels like warp speed sometimes.
It really does. We've got these huge tech leaps, big policy changes, and traditional industries trying to reinvent themselves.
So we're going to try and connect the dots for you, sort of separate the signal from all the noise, and hopefully give you those aha moments that really stick. So as we kick off this deep dive, what's jumping out at you first?
Well, I think what's really fascinating is just the sheer speed of change, especially on the digital frontier. The digital frontier, AI, tech, and market surges.
Okay, let's unpack that. OpenAI just dropped GPT-5. I mean, beyond the headline, what's the real shift here for like the everyday user or maybe for businesses trying to innovate?
Right. So what this really means, I think, is AI moving beyond just being a general chat tool.
Right.
It's becoming more like a highly specialized, almost expert-level collaborator.
Okay.
OpenAI is boasting a much lower hallucination rate. So basically, it makes things up a lot less often.
Good.
Yeah, definitely. And it uses what they call safe completions to filter out potentially risky or, inappropriate stuff. Sam Altman, the CEO, even said it feels like talking to a PhD level expert.
Wow. PhD level.
Yeah. And we saw this demo of something called vibe coding. It generated a whole web app just from a simple kind of conceptual prompt, like translating a feeling into code.
Translating a feeling, that's pretty wild.
It really is.
Yeah.
And Microsoft's already integrating it into their products. Box CEO Aaron Levy called it a complete breakthrough for things like retaining information and logical reasoning. And get this, OpenAI expects to hit 700 million weekly active users on ChatGPT this week.
700 million weekly. That's incredible scale.
It's huge.
So the key takeaway then is this move towards like hyper-specialization and real-world usefulness. What about some of the more niche, maybe high-stakes areas where this kind of AI is being used?
That's a great question because it really prompts us to look at how AI is being tailored for specific critical industries.
Right.
So for instance, Doximity, people often call it the LinkedIn for doctors.
Yeah, I've heard of it.
They just bought Pathway Medical for $60 million.
Yeah.
Pathway has this AI tool, basically a clinical reference tool for doctors. They can ask it questions about guidelines, drugs, trials.
So quick answers right when they need them.
Exactly. And what's really impressive is Pathway's model scored 96% on the U.S. medical licensing exam benchmark.
96%. Okay, that's serious capability.
Definitely. And we also saw Duolingo boosting its guidance. Its stock shot up 14%, all because of AI-fueled user growth. They've got new features like AI-powered video call practice.
Yeah.
They're even doing a chess course now.
From language to medicine to chess, that's quite a range. But if AI is getting this good, what's it mean for the other big tech players? Are they keeping up, or is anyone falling behind?
Well, it does seem like some are playing catch-up. Apple, for example. The perception is they're a bit behind in the AI race. They delayed that big Siri upgrade, remember? And their first AI features didn't actually launch in time for the iPhone 16.
Right, that was noticeable.
Yeah. And meanwhile, you've got competitors like NVIDIA and Microsoft hitting $4 trillion market caps back in July.
Wow.
A milestone Apple was kind of expected to hit first. And part of that is because NVIDIA and Microsoft are providing the foundations, right? The cloud computing, the chips, the AI models that everyone else relies on.
That makes sense. It brings up an interesting point, though. Is the private sector sprinting ahead? Is the government getting involved, too? Are they, offering incentives to speed things up?
Oh, absolutely. Amazon Web Services, AWS, they're giving federal agencies up to $1 billion in discounts through 2028.
$1 billion.
Yep. To speed up moving to the cloud and adopting AI tools. And the GSA, the General Services Administration, they announced similar deals last month with Oracle and even an agreement with
OpenAI. Federal agencies can get access to ChatGPT for just $1.
Just $1. Okay, so they're really pushing for adoption then.
It definitely signals a major push to modernize.
Wow, for a space company debut, that's strong.
It is. And they're the third space company to go public just this year, after Voyager Technologies and Karman Holdings. It really shows this growing investor appetite for space tech, especially with, SpaceX getting big funding and government contracts. Tells us investors are looking beyond just traditional tech.
So money flowing into the final frontier, quite literally. What about some of the more established names? Any surprises there?
Well, Instacart did well, the grocery delivery folks. They topped their Q2 earnings estimates, gave an upbeat outlook. Orders were up 17% from last year.
Okay, solid growth.
Yeah. And AppLovin, an ad tech company, their stock popped 12% after strong earnings. Their CEO, Adam Forey, he suggested they might actually benefit from the whole Apple Epic lawsuit fallout.
How so?
His thinking is, if developers don't have to pay Apple that 15–30% App Store cut, maybe they'll spend more on advertising, like with AppLovin, to find users.
Interesting theory. A potential silver lining for some.
Could be. On the other hand, Pinterest shares dropped 10%. They missed on earnings per share.
Yeah, so they did beat on sales, and they announced that Gen Z now makes up over half their user base, which is, a pretty significant demographic shift for them.
Yeah, attracting Gen Z is key for many platforms. So a mixed bag for the established players then. Economic shifts and policy plays. Okay, let's shift gears a bit. Moving from the market's pulse to a policy shift that seems to be touching almost everyone. Tariffs. It feels like they're making waves and everything from iPhones
To, I don't know, your next t-shirt purchase?
Oh, absolutely. It's a huge factor right now. We saw President Trump announce a 100% tariff on imported semiconductor chips.
100%?
Yep, though the...
They did. But despite that, Tim Cook, Apple CEO, still expects about $1.1 billion in tariff-related costs just this quarter.
even with the investment. Why?
Well, partly because of recent additional tariffs, like a 25% hike on imports from India. That brings the total levies on Indian imports up to 50%.
50%. Okay, so it's complex. With all these tariffs coming in, what actually happens to the money being collected? Where's all that revenue going?
That's the big question. The U.S. government
collected nearly $30 billion in tariff revenue just last month.
$30 billion in 1 month.
Yeah, and $100 billion since April. President Trump has floated a couple of ideas for it. One is paying... Well, economists are warning that, even though businesses are trying to absorb some costs, tariffs are definitely making certain things more expensive.
Like what?
The Yale Budget Lab estimates prices could jump significantly. Computers and other electronics. Maybe up to 17% higher in the short run.
Wow, 17%.
Clothing could go up by as much as 36.6%. Watches from Switzerland face a potential 39% tariff.
Oof. Okay, so if you were planning to buy a new laptop or update your wardrobe, this isn't just some abstract policy. It could be a real hit.
Exactly. It might make you rethink where you buy things from. And then there's what Fed Governor Lisa Cook calls an uncertainty tax. Yeah, the idea that business leaders are spending like 20 to 45% of their time just managing all these tariff shifts.
So less time focusing on growth or innovation.
Precisely. It leads to hesitation in hiring, in investment. Plus, the Trump administration also suspended the tax exemption for cheap international shipments, the de minimis rule.
Ah, right. The one that lets small packages come in duty-free.
That's the one. Now, those goods coming from abroad under that threshold will face duties, maybe $80 to $200 per item.
Okay, so that hits online shoppers getting things from overseas directly.
Definitely. It closes that loophole.
And this isn't just a domestic issue, right? Globally, how are these tariffs and trade policies playing out, affecting relationships?
They absolutely are.
Ah.
Take the UAE, for example. They're actually doubling down on trade with Russia.
Really? Even now?
Yeah, facilitating what are called dual-use goods,
Yeah.
things that can have both civilian and military applications.
That sounds risky.
Well, reports suggest this trade helps fuel Russia's war effort in Ukraine, and it's definitely testing limits with the U.S. But the UAE leadership has been pretty clear, indicating they'll maintain their foreign policy independence, basically saying they're not putting all their eggs in the American, Chinese, or Russian baskets.
So navigating their own path amidst these big power plays.
Exactly. It shows how economic policy choices can create these really complex geopolitical ripples.
Okay, beyond tariffs, there's also been a lot of talk about how financial institutions operate, specifically around something called debanking. What exactly is that, and what's the latest?
Right, so debanking is basically when a bank denies services, like accounts or loans, to individuals or businesses. And a key development here is President Trump signing an executive order just today aimed at ending what he calls discriminatory debanking.
Discriminatory based on what?
The order targets the practice of banks denying services based on political or religious beliefs. It tells federal banking regulators to remove reputational risk language from their guidance.
Reputational risk. So banks were worried about being associated with certain clients.
That's the implication. The order also requires the Small Business Administration to encourage banks to reinstate clients who were previously denied, potentially on these grounds. Trump himself has claimed he was personally targeted by debanking efforts.
Interesting. What are the banks saying?
Well, the major banks generally deny having, like, a political litmus test. But some have apparently welcomed the order because it might ease some regulatory pressure on them regarding who they serve.
So advocates might see this as promoting fairness, but couldn't you argue banks need to manage their own reputational risk? Where's the balance there?
That's exactly the tension, isn't it? The order tries to limit the discretion banks have, pushing for a more neutral stance based purely on financial risk, not on whether a client holds controversial views, as long as it's legal, of course. It's trying to draw a clearer line between financial risk and this more vague reputational risk.
Okay. A complex issue. And also on the financial front, there are potentially huge changes coming for retirement savings, things that could affect many of us directly with our 401ks.
Yes, President Trump also signed another executive order. This one basically lays the groundwork for allowing alternative assets into 401k plans.
Alternative assets, like what?
Things like private equity, cryptocurrencies, maybe even real estate. Bitcoin actually jumped a bit when the news broke.
Okay, so putting crypto in your 401k, what's the argument for that?
Advocates say it offers diversification, potentially higher returns over the long term for investors. But,
There's always a but.
right, some financial advisors, like one named Charles Massimo, are warning that for unsophisticated investors, as he put it, these assets could be trouble.
Why is that?
Because of potentially high fees, a lack of transparency sometimes, and illiquidity, meaning it's hard to sell them quickly if you need the cash. Massimo said it could be only asking for trouble.
So higher potential reward, but also higher potential risk and complexity.
Exactly. But despite those concerns, big players like BlackRock and Empower are apparently already planning to include private investments in their 401k offerings. So you really might see very different options in your retirement plan soon.
Something to keep an eye on, definitely. Okay, shifting from policy and finance, let's look at the job market. What are the latest numbers telling us, especially from the Bureau of Labor Statistics this week?
Well, there was some significant news there. President Trump fired Dr. Erica McEntharfer, who is the commissioner of the Bureau of Labor Statistics, the BLS.
Fired. Why?
It happened right after the July jobs report came out. That report showed weaker than expected job growth, and it also had significant downward revisions for the previous months, May and June.
Downward revisions, meaning the job growth wasn't as strong as initially reported.
Correct. President Trump claimed the numbers were rigged. However, it's important to note the BLS is designed to be an independently operated agency. And revisions, they're actually a normal, long-standing practice in how they calculate this data. Although these particular revisions were historically quite large.
So revisions are normal, but these were unusually big. How did others react?
Fed Governor Lisa Cook called the report concerning. She suggested it might signal a turning point for the U.S. economy.
A turning point, okay. And how might all this, the report, the firing, the revisions, impact the Federal Reserve's direction, especially on interest rates?
Well, related to that, President Trump nominated Stephen Miran to fill a temporary vacancy on the Federal Reserve Board of Governors. His term would run until January 31st, 2026.
Stephen Miran. Who is he?
He's currently the chair of the Council of Economic Advisors, and he was actually one of the architects of Trump's tariff policy we were just discussing.
Ah, okay.
He's also known to be a critic of the current Fed chair, Jerome Powell, and is generally seen as someone who would likely support lower interest rates.
So potentially shifting the balance on the Fed board.
It could. This appointment comes at a time when two other Trump appointees on the Fed board already dissented at the last meeting. They disagreed with the decision to hold interest rates steady. So adding Marin could strengthen the push for lower rates within the Fed. Evolving landscapes in media and work.
Okay, let's pivot now to the media world. It feels like it's constantly transforming. What's happening with ESPN? How are they trained to stay competitive?
ESPN is making a really massive pivot towards streaming. They're launching their own direct-to-consumer service on August 21st.
A standalone ESPN streaming service.
Exactly. For $29.99 a month, it'll offer their full lineup of networks, something like 47,000 live events a year.
That's a lot of content.
It is. And interestingly, the NFL is set to own a 10% stake in ESPN, assuming regulators approve it.
The NFL owning part of ESPN, that's big.
Huge. And ESPN also secured broad rights to show NFL Network and Red Zone content. Plus, they've added big WWE events like WrestleMania and Royal Rumble.
So really doubling down on live sports and major events.
Absolutely. And Disney, ESPN's parent company, is also fully integrating Hulu into the main Disney Plus app now.
Right, making it all seamless.
Yeah. Disney CEO Bob Iger basically summed it up, saying, we're in the television business. We're giving our customers a chance to watch our programming wherever they want. It really shows that shift away from traditional cable bundles.
Yeah, meeting viewers where they are. Meanwhile, Paramount's leadership is also making headlines, right? A really significant change at the top there.
Yes. Control of Paramount has officially shifted to David Ellison. He's the son of Oracle founder Larry Ellison.
Okay, new leadership. What's his plan?
Well, he's pledged to invest more in Paramount's streaming businesses like Paramount Plus Vimin, and also to upgrade their apparently quite outdated technology systems.
Needs some modernizing then.
Seems so. This whole transition followed a pretty politically charged merger process. There was even a $16 million settlement with President Trump over a 60 Minutes lawsuit tied into it all.
Wow, okay. Complex backstory. What about the directions, say, for CBS News under Ellison?
Ellison has said he wants CBS News to appeal to, quote, 70% of Americans, stretching from the center-left to center-right. He's emphasizing fact-based journalism.
Aiming for the broad middle ground.
That seems to be the goal. But employees are also bracing for potentially another round of layoffs. Ellison is targeting over $2 billion in efficiencies, which highlights the ongoing financial squeeze in traditional media.
Right, the pressure continues. Now, beyond these big traditional players, we're also seeing new voices pop up, especially in podcasting, right? Carving out specific niches.
That's right. Katie Miller, for example. She's a former Trump administration aide, also worked for Elon Musk. She's launching the Katie Miller podcast next Monday.
Okay, what's her focus?
She describes it as a space for conservative mothers, offering, quote, real, honest conversations and goss about what's going on. Her first guest is set to be Vice President J.D. Vance.
So targeting a very specific audience.
Exactly. It shows how individuals and niche interests can really find these direct audience platforms now, completely outside the old media gatekeepers.
But not all content is landing well, is it? We've seen some pretty significant backlash recently around things shared online.
Yeah, definitely. TikTok just removed an anti-Semitic video posted by Huda Kattan. She's the founder of the Huda Beauty makeup brand.
Oh, wow. What was in the video?
She was spreading conspiracy theories, accusing Israel of orchestrating World War I, World War II, 9/11, and the October 7th attacks.
That's quite a list of baseless accusations. How are retailers reacting?
Sephora, which is a major seller of Huda Beauty products, says they are actively reviewing the situation. They put out a statement saying that promoting hate or misinformation doesn't align with their values. And that this actually follows previous calls to boycott Kattan because of her outspoken criticism of Israel and her support for Palestinians. It really highlights the tough spot platforms and brands are in with content moderation and creator controversies.
Yeah, the ripple effects can be huge. Okay, finally, let's look at our physical workplaces. That whole return to office push, which has been debated endlessly, it feels like.
That's up significantly from 61% last year.
Okay, so companies feel they're hitting their targets more often.
Right. And more companies are actually tracking attendance now. That jumped to 69% from 45%. And the number of companies actively enforcing their return to office policies. That rose to 37% from just 17% last year.
So more monitoring, more enforcement. What's the typical expectation? How many days a week?
Employers, on average, want staff in the office about 3.2 days a week.
3.2. Okay. So the hybrid model is still dominant, but leaning more towards in-office.
Exactly. And interestingly, maybe counterintuitively for some, more companies, 67%, now expect to either expand or maintain their current office footprints rather than shrink them.
Really? They expect to need the same or more space?
Yeah. Though there's still concern about the availability of really high-quality office space. But it suggests the narrative of the office dying might have been premature. It's definitely changing, but perhaps not disappearing.
So pulling all this together, what does it all mean for you, our listener? We've seen this incredible acceleration in AI, right? Moving from just general tools to these highly specialized collaborators. It's fundamentally reshaping industries, the nature of work itself.
And at the same time, we're navigating this really complex economic landscape. It's heavily influenced by aggressive policy choices like tariffs, which, as we discussed, have very real impacts on your wallet and on global supply chains.
Yeah. And then there are these profound changes underway in how we consume media, how we manage our finances, even our careers, with things like this potential 401k shifts.
Yet if we try to connect all these dots, maybe look at the bigger picture. It suggests we're living in a world where information, whether that's economic data, AI capabilities, or even, social media content, it's not just abundant anymore, it's also increasingly contested, and it's incredibly influential.
Right. The source and the spin matter more than ever.
Exactly. So understanding these underlying currents, like the ones we've talked about, not just reacting to the daily headlines, becomes even more critical for you to make informed decisions to navigate all these shifts.
And that really leaves us with a final, maybe provocative thought for you to chew on. In this era where so much is being disrupted, from how we value companies to where you might invest your retirement savings, even the very nature of truth in the media we consume, how will our own individual ability to discern, to adapt, and to critically evaluate all the information coming at us, how will that shape the next wave of innovation and perhaps stability?